How's it going, everybody? My name is Matt, and I want to welcome you to the 0 to 100K project, where I'm challenging myself to go from zero to $100,000 a month in passive income. And the great thing is, I'm inviting you to come on that journey. I'm challenging you guys if that sounds good to you, if that resonates with you, and you want to accept that challenge, then go ahead and subscribe to my channel. And most importantly, right now, we have an awesome AMA right now with Sergey and Bishop of Fathom Finance. And I need you guys to hit the like button because I want YouTube to know, I want the algorithm to know that this is important, that people need to see this. I see projects every day as a YouTuber, as an influencer in the space. I'm constantly looking at white papers. And these guys really stood out to me because I feel like they're doing something unique and different in the space. And that's also why I wanted to have them on today. So I think you guys will really like this. So again, hit that like button if you can. I would greatly appreciate it. And with that, I want to welcome Sergey and Bishop. If you guys just want to go ahead and give a brief introduction, maybe just who you are, a little bit about your background, and maybe why you guys started Fathom. Sergey, why don't you go ahead and kick it off?
Absolutely. So, hi everyone, I'm Sergey. So yeah, basically we were, I got into DeFi just under 2 years ago at this point, and got heavy into several different projects. One of them I became a moderator for, and that's where Bishop and I met. And I just started looking around and looking at all the transactions and understanding how they worked and why some tokens moved quicker than others.
Yep.
And just, because the one that we were in was, a lot of people called it a stable coin because it just did not move very much for the volume it had. And just started looking and watching really a lot of other projects that sounded great launch, but then eventually fail. They all had the same exact fate where they would launch, they'd have a little pump, then it would just progress as it got listed on like CoinMarketCap, CoinGecko, then marketing kicked in. You see a huge jump, and then it hit an all-time high, and from there on, it just kind of petered off down to nothing. And so we were just looking around and trying to figure out how can we make something that can be self-sustainable and doesn't have the same fate that all these other projects have. And that's where Fathom has come from, because we recognized really the important parts that would help a project survive.
Awesome. Go ahead, Bishop.
Yes, and my name is Bishop. I've been in DeFi just under how long Sergey has been. We met in a different community modding together. And from that community, we just started to see kind of the deeper aspects of cryptocurrency and the finer points of community. We really fell in love with trying to build a community that's going to really rally around and be supportive of the group and have intrinsic value. So yeah. We've been working on that for over a year now, since we first met. And well, we've actually known each other for about 2 years now.
Cool.
So we've been working on this for quite some time. But me personally, I was actually a neuromedical device sales representative that ran the American branch for a few months, for about a year, and then Corona hit and a bunch of stuff happened.
Yeah.
So that allowed me a bunch of extra time to get into DeFi and truly find my new passion.
Awesome. Yeah, I think you guys hit a couple things. Number one, you guys are and were investors. You learned a lot of what was working, what wasn't working in DeFi. And I think even now, everyone's on the hunt, creating projects, trying to figure out that sustainability key. Like how can it not just pump once and then die forever and never recover? So far, I think everyone's really after that. So in talking to these guys off camera, it seems like it's been their heart to discover that and to figure out how they can implement some tokenomics and take a little bit of things that work from a lot of different projects and build something totally from scratch. This is all unique code. Like these guys just said, they've been working on it for over a year. So this is why I wanted to bring it to you, because I thought it was important for my audience to kind of get a heads up on this. And they're going to tell you about their pre-sale that's coming up in not very far away, something that you guys may want to be a part of. Again, it's not financial advice. And but yeah, so let's jump right into I guess we'll just start by jumping into the white paper. And Sergey, I might have you kind of kick us off. And I kind of want to stay at high level because, to be honest with you, my first impression, I landed on your website, I scrolled down, and it's actually a beautiful website. So nothing against the website, but because the protocol is different, it just did something in my brain that was like froze me up, and I was like, I don't know, and I just kind of like stayed on there for a moment and then left, and then I had to keep coming back. But now that I've been studying it and getting it, it's kind of like I had that aha moment, and it's pretty exciting actually. So if we can stay away from frying people's brains, but also just kind of opening them up to something new, maybe you can give it your best shot at like the 30,000 foot overview of what it is, and then we'll dig in.
30,000 foot. It's a lot of fathoms, actually.
There you go.
And I'm going to point because we do have these nice avatars. So here's our white paper, the cover. But Bishop, do you want to start?
Sure. And I
guess guys,
we'll
we don't have to go through this whole thing. We'll kind of, like I said, give us the brief overview, and then we'll touch on what it is and what it isn't, because I think that's important too.
Yep. So the biggest thing of what we are is a revenue generation stream. Our main goal from all our taxes, everything that we're doing is actually to bring in enough revenue that we can start a revenue stream of our own, external revenue. So we'll be having bots, validators, and other DeFi protocols that we're invested in that allow us to make a yield and put it back into the token. Because as you'll see, our staking mechanisms are quite novel and new, but every protocol needs revenue stream if they're going to support themselves in the future.
Totally. And I think I'll just throw something in that's different than what I've seen on a lot of projects, because let's be honest, like most projects say that they're going to do that stuff, but most of them never do. And now this project isn't launched. So again, we don't know till it launches, but based on what Sergey and Bishop are saying, like they're going to start by taking, correct me if I'm wrong, but I think you guys are going to take part of the pre-sale raise and put it right into these kind of revenue streams and validators. Is that right?
Yeah, about 50% of it.
Okay, so about 50% of it. And then also the tax structure is such that I'll let these guys cover it, but it's structured in a way to give them lots of money to make these investments right away and not down the road. So I just wanted to make that quick interjection, but you guys go ahead.
Yeah, and one thing I want to also say is the down the road part. A lot of these different tokens, you're waiting on the staking, you're waiting on the DApp to launch, and all that is kind of a promise down the roadmap, but we're launching with 100% utility.
Yeah, that's true.
So we'll be up and running, ready to go for a moment. Sergey showing the DApp right now.
Yep.
Yeah, go ahead, Sergey.
Yep, so this is our DApp. It is currently live on testnet if you wanted to try it out at dapp.fathom.finance. So yeah, we are fully operational. We're not launching with the speculation of what's to come. We're launching with, this is what we've already created.
Mm-hmm.
And it's no promises. We don't even have a roadmap at this point in our white paper, because we don't want there to be hype about what we're planning to do, but we just want it to be based on what we've already completed.
Very cool.
But yeah, so the main focus, of course, for the long-term sustainability is revenue, because without revenue, we will fail just like everybody else that doesn't have revenue. But beyond that, we've come up with really a new way to reward those who are staked in our system. And that's really one of the things that sets us way apart from the others.
Right. And I heard you say, what'd you say the protocol? You called it a reward-based, what'd you say?
A value-based
rewards. Right. So I think what most people have in their mind when they hear this sort of thing is like a rebasing project. I'm only saying that because that's what people can relate to. But they have taken that and flipped it on its head and sort of solved some of the biggest problems that occur in rebasing projects. And this isn't one. This is not a rebasing project, but the reward structure is similar. So that's the only reason I bring it up.
The rewards, it's similar.
The way they're delivered.
In that it's going to be consistently coming out. It's not going to be volume based. That's where the similarity winds up being. Yes. But the way we're calculating the rewards is I haven't seen anywhere else. So basically, at the time of staking, when you stake your Fathom tokens, the BUSD value is captured, and the dividend tracking token that is sent to your wallet is based on that value at the time of staking. Now, every single staking protocol out there does have this tracking token, because When you stake your tokens, it goes into the staking contract, and then the system has to know how much of those rewards you're supposed to receive. It's never discussed because it's usually if you stake 1,000 tokens, you get 1,000 of these tracking tokens because everything's token based. But
Right.
since ours is value based, and there's other things that occur with this dividend tracking token that we have called MAS, we are putting a huge focus on it because it's very important to how our system works.
Yeah. Can you give an example? Like you put this much value of Fathom staked and what happens with your mass, et cetera?
Yeah. So at the time of staking, we actually have one here. But so if you do have 1,000 Fathom tokens and we'll say the price is a penny, or I'm sorry, 10 cents. So they're worth $100 at the time of staking. So you will receive 100 mass into your wallet. And we do have a staking tax of 25%. So then 750 Fathom will go to the staking contract allocated to your wallet.
Okay. Yeah. So it's based on the value of the Fathom tokens that you're at the time of staking.
Yeah. And the reason we came up with this was, if you've ever been in DeFi, if you've done DeFi for a little while, you have bought and staked the top.
Totally.
Right. And what happens is as that price drops, your rewards also drop because it's based on number of tokens you have. And in the event of like a 90% drop, which is very common, somebody else would only have to spend basically 10% of what you spent to get the same rewards you're getting. If they put the same amount in that you did, then they're actually getting 10 times the rewards you're getting. And to me, that was just very unfair. And it's
right.
And I think that would also, in a psychological way, even for myself, I wouldn't jump in if there was a lot of green on the chart because I didn't want to lose. And I think just that alone could really stop the momentum of certain projects that are doing well. And so when we base it on the value, so in this case, right, 1,000 tokens, 100 mass. So you've got, let's just say you stake the top, right? And then the price drops that 90%.
Right.
So now I have to put in at least $100 worth of Fathom to get the same rewards as you. I can't just put in $10, buy $10, buy 1,000 Fathom at a penny for $10 and then get the same rewards as you. I'm actually going to have to spend $100, stake that, get the same mass as you, even though I'll have 10 times the number of tokens.
Yeah, that's interesting.
But this way, as an investor, you're protected when the price does drop, and that was the important part.
No, I think that's very cool. So we'll probably hit more on that when we talk more about the taxes. But this idea of it being value based versus the amount of token based, it's a pivotal point that makes Fathom different. The other thing that obviously makes them unlike a rebasing project is that there's a fixed supply, right? There'll never be any more than there are at the time of launch. Is that right?
Correct. We will be 1 billion tokens will be minted at the time of launch, and there is no way to mint anymore.
Awesome. So there's no inflation. So there's that problem right there. Okay. So there's a lot of cool things going on that make these guys different. So why don't let's just keep rocking here and we'll keep asking questions. And also, you guys, I have questions, but I want this to be your chance to get questions answered. So please go ahead and put them in the chat and I'll go through them. I'll make sure they all get answered. Unless they're crazy, I'm not going to put them up there. If they're just, crazy FUD or something weird.
Bring it on, man. Let's do it all.
But don't be afraid of the hard questions, right? I like that. No. Like bring the hard questions because these guys have really put their blood, sweat, and tears in this. And this is for you guys. This is why I'm doing it. So ask your questions again, like the video, and we'll keep going.
So again, let's keep talking about mass, I guess.
Sure. Yeah.
So normally in any other staking protocol, whenever tokens are unstaked, all of those dividend tracking tokens are just sent to the burn address. But in our case, we actually decided to do to reflect some of the tokens. So we've got 25% of those tokens when unstaking occurs of the dividend tracking tokens called mass. Those are actually reflected to the other stakers. It kind of becomes like a dividend sharing system. So over time, even if you don't do anything else, you will receive reflected mass as others leave. So your rewards will actually increase. And you can look at mass as like the value of your stake. So you might start with 100, but then as people come in and leave, you could be at 120, 130, whatever. And so that means that, the value of your stake becomes higher and higher. And so you're going to just earn better rewards without doing any kind of compounding or staking more, which is usually what's required to get those better rewards.
Very interesting, right? Because usually when people sell, it's not a good thing for the protocol. And also it hurts the people that are holders because the price of their assets going down then. But in this case, because we're dealing with mass, your ability to earn more, you're getting reflected that mass. So your ability to earn more every 15 minutes when the waves come out with treasure on them, which is the Fathom tokens, you're going to get more of that. So I think that's a pretty cool system to incentivize and reward holders and make it okay and make it sustainable. We were talking off camera that it's impossible. Like if the success of the protocol is dependent upon everybody in the protocol acting a certain way or doing a certain behavior, it'll never work. Like it'll only work for a certain amount of time. And then as soon as it's broken, we've seen it over and over again. So we'll see. Everything in DeFi is like an experiment, right? So these guys have a new experiment they're about to roll out. They feel like it's pretty ironclad. So I'm excited to see. They feel like they've kind of built like this circular ecosystem that it's okay when people sell, it's okay when people buy, and it should just make it stronger and increase the revenue streams and reward holders. So that's my take on it anyway. That's the way I've kind of, as I've been studying it, that's what I'm seeing.
Yeah, the fun part of this is what's normally considered bad, which would be unstaking and selling.
Yeah.
That makes us so much more sustainable and increases everybody's rewards. Because mass also, because everything's based on value and mass is based on value, and we're going to be tracking our ROI based on mass, that gives us basically a total liability in our system. So if we're sending out 1% daily, which is our goal, and we have 1 million mass, that means we're sending out $10,000 worth of Fathom every single day. If we have a lot of people unstake and sell with 75% of that mass being burned, and let's just say something extreme, we go from 1 million to 500,000 mass.
Right.
Now our liabilities just dropped in half. We're only sending out at 1% daily $5,000 worth of Fathom every single day. And because that's only 75% of the mass that were unstaked, another 25% were reflected.
Right.
Everybody else's mass went up by 50% in that situation. So everybody's going to get 50% better rewards. We're paying out half of what we were before, so we're much more sustainable and our revenue stream will not have been affected negatively at all because we don't have to pull from that when people leave. And so it's definitely a very interesting dynamic. It's so different from what's out there, but there will be a time, like you, if you have a big bag, you'll be out here making a FUD video about us saying, everybody, you should sell, they're scammers, and get everybody to unstake and leave, and then you're going to have better rewards and we'll be more sustainable. Like, I don't think you'll do that or not, but if you did, it would be better. It would be good for you, which is so backwards.
Right. So basically the basic point there is that when people unstake, they forfeit their mass. Part of it gets reflected and the other part gets burned. So the overall protocol liability decreases every time somebody unstakes. What they have to pay out every 15 minutes goes down, right?
Yes.
Okay, cool. So another cool piece of the puzzle there. I do have a question I want to throw up, and it's how transparent will you be in the revenue streams? Like, are they fully visible? Can you give some examples and numbers of revenue? You probably did some calculation in advance. You guys want to take that on?
Yeah, I kind of answered that in the chats already, but I'll kind of bring it on the stage.
Sure.
We're going to be as transparent as possible with all of our revenue streams. So we'll be giving out wallets so that people can follow along with it. However, as far as the calculations go, all that's just speculation at this time and not really possible. What I can say is that our trading bot absolutely rocks and has had some great history for different protocols in the past.
Okay.
So it is a tested bot that has some great great returns on it. But as far we're not able to give out a number currently, as in we expect this much revenue within this amount of time. It's going to be something that's organic, and we're going to grow together with the community.
Cool. That sounds great. Okay. We'll go ahead and keep moving along, Sir Jay.
Awesome. Well, that was pretty much mass, and we could talk about mass for another couple hours, but
yeah,
something else. Where would you like to go?
Yeah, maybe we just hit on the tax structure and maybe why you guys decided to put it that way and why it's actually a beneficial thing and not, not a bad thing. And the reason I'm saying that is because there's some taxes that are heavy in the front end. So go ahead and maybe explain what you guys were thinking in your thought process there.
Sure. Did you want to hit it up, Bishop, or?
No, go ahead, sir.
Okay.
I'm handling chat right now.
That's perfect. Yeah, so our tax is actually backwards from most others. So we do have, hold on, I'm calling the wrong page here. But our buy tax is 15%. Our sell tax is 5%. And that is, backwards from most others. Usually it's a lower buy tax and a higher sell.
Yeah.
The reason behind that is, taxes are usually used to benefit the protocol or the investors. It depends on how they're distributed up. But everything I've ever seen, the tax will raise money for marketing. So if with a low buy and a high sell, it's almost like the team is saying, hey, we're going to raise money to support our project when you decide to leave. So we've switched that up so that when you come in, we're receiving the funds to support your investment from the start. So you won't get to the point potentially that you feel you need to leave because there's no marketing or there's, we don't have what we need to help your own investment. And that's what our whole goal is, to make sure that everybody who comes in, we can do everything we can so they will make money. That's the whole point of all this.
So you're basically saying we want to structure the taxes on the front end so that we can use them to strengthen the protocol, bring in more revenues, et cetera. That's your thinking in a nutshell?
Yeah, exactly.
Okay, cool. I just wanted to make sure people were kind of understanding that. And we were talking offline as well about taxes and protocols. And also, it's just important to note that in some protocols, like you lose your initial investment and that's essentially like 100% tax. Basically, Sergey made that point. I was like, wow, okay, that's interesting. Maybe that's true. They just don't call it a tax.
If you can't unstake your tokens ever, it's a 100% tax.
Right. So anyway, interesting way to look at it for sure. So I have here, let's see, AJ says, which chains are you targeting for being validators? Is that a community decision or a dev decision?
So I was actually just responding to him, but I'll jump on here.
Yeah, I always want to make sure I answer it on here too, in case.
Yeah, it was a good question.
Yeah,
it was a good question. So we do have a few that we have set up at the beginning, just because of price of entry, and other things that kind of would prohibit us at the beginning to going in. But however, most of it will be community based. So we want to bring the community in and really allow them to help us make decisions on where we invest. Especially for the validators, because our community members probably have a lot more knowledge as combined than we do just by ourselves. So we really want to pool all our resources together, our community's insight, and make the best decisions for the protocol together. And also that just helps us, there's still risk involved in these things, because we could have at one point, if we would have launched in March like we originally wanted to, it would have cost us about almost $1 million to get some of these validators. And that's another reason why we're doing it this way, is because none of us, or most of us here, aren't going to be able to afford $1 million validator. So we're trying to group pool all this and allow us to pool our funds together in order that we can have some type of individual ownership of it, community base wise. But yeah, now that we're in the bear market right now, things are looking really great, where we're able to pick up that $1 million validator for under 100K. So,
so you're picking these up in the bottom of the bear market. Well, we think so. We think it is close to it.
Well, even if it's still going down a little bit, we all know it's going to go back up.
Yeah.
It's just how long it's going to be. And truthfully, we want to stay down here for as long as possible, because the longer we're at the bear market at the floor, the stronger foundation that we can have for the future.
Cool. That makes sense. Awesome. Great way to answer that question. So yeah, you were just talking about the taxes. So, and the way that I see it, this helps me understand it. There's like almost like two different tax structures that you could think of. There's the buying and selling and transferring of normal trading a token, and then there's the like a subset of taxes that deal with staking and unstaking, right?
Yes.
Okay.
So because you don't earn rewards until you're staked, we do have a 25% staking tax. And the breakdown of these taxes, 75% of everything we receive in taxes will go to generate revenue. Again, that's our focus. We want to be making as much money back into our system as possible, because we know that is the lifeline, the long-term lifeline of any project, really. So 75% of everything we raise goes to that. The other 25% goes to our DevOps wallet, which will take care of marketing, any other expenses we have. And there's a lot to go with this, especially marketing and just operating everything.
Yes.
But yeah, so that 25% tax does exist for staking only. But so that, again, right, once you stake, our liability increases because there's more mass that exists.
Okay.
And so we're raising extra funds to basically support what we're paying out to you.
Right.
And then, like you said, unstaking, there is a staking tax if you do it within the first 8 days. So for the first 2 days,
yeah, go ahead.
Everything is locked for 2 full days. And after that, it's stepped down by 25%. The following 2 is 75%. The next 2, 50. The last 2, 25%. After 8 days, there is no restriction or penalty for unstaking. And all of those tokens that are collected in that tax, those aren't going to be sold. They're going to go right back to our rewards pool, the ocean, which is where all the rewards are coming out of.
Okay, so you're saying 100% of these Ripple taxes are going to go straight into the ocean to be used as rewards?
Yes.
That's pretty cool.
Yeah, so and actually what we could see, especially because everybody is staked at launch, after the first 2 days, once we do launch, we could see basically a deflationary aspect as that ocean, if people are unstaking after 2 days, because now that ocean is just going to get bigger and bigger. And not only, and then those essentially come out of circulation and can't be immediately sold. But not only that, I know we haven't got to this yet, but the rewards are sent out based on a percentage of that ocean. So as those tokens get sent there, each wave that gets sent out will actually be slightly larger. So everybody's rewards will increase from that. Plus, there will be those reflections of mass that occur as well. Right. So it'd be interesting if we have a lot of people unstake after those first 2 days, because it's going to benefit every single person that is staked.
And then also just to keep in mind, when they have this pre-sale, everyone is going to be auto staked. So anyone who buys into the pre-sale or who bought into the previous pre-sale they had, that's going to be auto staked. And those people you're not going to have that day one dump that normally happens, like a spike up and then everyone dumps their tokens, because it's locked for 2 days. So that's some interesting game theory there. And then they're going to be subject to these Ripple taxes that go down 25% every 2 days. So it's not till the 8th day, if I'm right, that you can actually unstake without a penalty or a tax.
Correct. And so what this really does for our launch, it gives us some room to kind of, like you said, game theory, right? Even on our end, we will be. Yeah. Because everybody is staked and nobody can sell, we're not going to use all of the raised liquidity at launch. And so what we'll do is, and actually I figured this out, if we use only like 20% of our raised liquidity, and so our launch is basically going to be like a fair launch. So we're hoping a lot of people come in to trade the token, to try to just profit short term at launch, because again, we're collecting 20% tax round trip. So we're going to be building our jet stream, our revenue stream up, and they're not going to be taking, rewards. So we're not increasing liability. So we're hoping there's a lot of trading that occurs.
Right.
But then after, like we're expecting after that 8th day to see a lot of unstaking and selling, once 100% of tokens, because it always happens. Why would we be any different, right? So we're prepared for that. So if we use 20% of our raised liquidity at launch and we set the floor, we'll just say launch price, and we allow it to actually drop 50% below that, we'll be able to bring it back to launch price 13 different times. And that's a strategy I'm calling a floor recovery strategy.
Yeah, that's interesting too.
It's similar, I guess, to a to kind of trying to hold the floor price, but by allowing it to drop further and bring it back up, it actually uses a lot less capital.
Right.
And where it's going to help us build that floor better because we're getting a lot more tokens purchased from recovering the price than if we just tried to maintain a floor.
Yeah, that's an interesting strategy and something to think about. So they're planning, they're not going to use all of the funds raised in the pre-sale that they could use for liquidity. They're only going to use, what'd you say, 20%?
About 20%.
About 20%. And they're holding it back to inject in to kind of keep if there is a massive sell-off, they can help stabilize that out and keep the chart looking somewhat healthy. I think that's kind of the underlying thing that you're trying to say.
Yeah, because let's face it, right? Go to any launch, anybody probably find any launch pad, right? And then it's always, hey, devs, we don't want you to have any control because we don't want you to screw us over. But once the price drops, then everybody's like, hey, devs, can you do something?
Right.
And it's basically like, no, because you made sure we had no power, but now you want us to have power. So we've taken that very much into consideration. So we're going to have the power to do something because that's another protection built in for every single one of the investors who are in the system.
Which kind of brings us to an interesting point here where I'm hearing you say you guys are going to maintain that power. So the contracts are not going to be immutable from what I understand. And in your opinion, why is that a good thing, I guess?
As far as
the ability for you guys to make changes to things and maybe update something, and like something's not working like you thought it would, now you can change it.
Right. So basically, if we couldn't make changes, there's a good chance we were wrong on something. And if we couldn't make the change, now we're having to go through a relaunch or a migration. And what is so funny about migrations, you usually see them with like renounced contracts, especially.
Right.
It's the contract is renounced, which gives an amount of safety. But then during the migration, what winds up happening is everybody sends their tokens to the developer, who will then sell the tokens off to pull the liquidity out. Like, I guess that part is missed. Like, literally, you could send your tokens to them, they could sell off and disappear, and now everybody just gave away your money. And for us, a migration, I've been through them as an investor, and it's kind of miserable.
Right.
And you're hoping everything gets, I've seen many times where people's funds were missed, and I just don't want to go through that as a developer. So yeah, everything is adjustable, so we can change things up. Plus everything is going to be upgradable because there's a good chance that there's something, even in all the ridiculous amount of testing I've done with all the contracts, that we've missed something and we're going to need to make some changes for it to function better.
Right. And then maybe talk about the security aspect of it, because now you have this sort of control. How are you going to prove that you guys aren't going to do something harmful to the protocol?
So I guess, can I jump in here? That is the biggest drawback of our system, honestly, is the centralization of it all. And yes, we do want the control to be able to help, but it comes down to if you trust the dev team or not. And because with the way the revenue stream is structured and the way the proxies work with our contracts and everything, it is true that centralization is the biggest concern that I have for our project. That, and if people will adopt us. I know AJ talked about this in the chat, so I wanted to bring out a hard question. And
I saw that.
Yeah,
thanks.
And those are the two factors. And are people going to be able to wrap their heads around this and truly adopt it the way it should be? So those are my two biggest fears of this project. But I think people can see that we have been working on this project for over a year. We've already dedicated over $100,000 in development funds to get to this point. this isn't something that we're looking to make a quick buck on or be here for a year or two. We're trying to really make a protocol that's able to stand the test of time, and just like blockchain, it can.
Right. No, that's great. And then you guys are partnering with True Seekers, and maybe kind of talk about how does that help in this regard?
So I was actually, this was a concern of mine, this whole, we're gonna have a lot of control. Plus, holding back money for liquidity, that's normally a huge red flag.
Yeah.
But, and we were talking about doing, we were definitely going to do a KYC with somebody.
Okay.
And then when Truth Seekers came in and we discussed it, and then we met, and then they're like, yeah, we want to partner up. I was actually thrilled because our KYC will be done through them. The contracts are being audited for the second time through them right now. They're going to put the wallet watchers on whatever wallets we're using for the protocol. See,
that's going to be huge, I think.
Yeah, because there's nothing for us that we're trying to, like hide or anything. I know that them finding us was going to make a huge difference because they're going to be watching us as well. We've done several video chats with them. We're not coming out to docs right now, but we're not necessarily trying that hard to hide ourselves. So, I guess
other than your fancy cool avatars, you're not trying to hide.
Yeah. But, yeah, there is a lot of centralization, but a lot of it's going to be just to get the system right. And we're not going to be constantly making changes. It's just going to be, okay, this needs to be adjusted this way. Or one of the things that that we need to really have control over is how the rewards are going to be sent out, because again, it's a percentage of the ocean that is sent out every 15 minutes. It'll be every 15 minutes at launch. That can be adjusted as well. But, in the event that a massive dump happens and the price goes way down, and that actual daily APY, say, drop from 1% to 0.5%, once we stabilize, we'll be able to adjust that pool being sent out and bring it back to 1% for everybody. And that was important for us to be able to do that, because now that's really better for every investor, everybody who's staked in our system. And that's what we've looked at is how do we make this great for everybody? Because as long as we are continually bringing in revenue and our system is operating, we'll be around forever.
Yeah, I actually can't wait to see this thing in action. I want to see, because it's all very intriguing ideas, and I want to see when rubber meets the road. I want to see this thing working.
Right.
I'm sure you guys do too.
I'm excited too. It's just we're so close there, and and I'm very excited. And once we get this audit back, and if there's any corrections, our team is really quick with that kind of stuff, and then we're ready to go. So you do have a lot of manual controls, which can be a good thing as long as there are checks and balances, right? So they're bringing on Truth Seekers as partners. They're, like you said, they will do a KYC. They're currently doing an audit. And in terms of doxing, probably sometime down the road, they're saying they'll cross that bridge, but they're not sure when or anything like that. So for those of you that you have to have that doxing element, maybe you just want to wait. Maybe you want to see how it goes. But they will have the KYC and the audit performed. And you already got another major audit that was already completed. And who did that? That was through Solidity Finance.
Okay, so they already have a Solidity audit. So they're really trying to do their best here in those regards. So, I personally like that. I know that sometimes audits and KYCs don't mean anything, but it is better than not having them, in my opinion. So, especially if they're done by the right people or the right companies.
Right. Not InterFi, don't worry.
Exactly. There you go. So anyway, okay, I'm going to throw you a little curveball, because we've kind of got into some of the more granular things, which we need to know. But can you go and share your website, or if not, I can quickly pull it up, the graphic where you have like the circle of all the elements. I just think that's a great, right there. For me in my brain, like kind of like if we just kind of go around that for people and just kind of describe to them real quickly what each one is and how they work together, I think you could get a good picture of the whole ecosystem and how it works better than looking at the white paper.
This does turn out to be really nice and handy. Bishop, do you want to speak some? I know I've been talking my
I'll tell you what, I'll give it a try if you want me to.
Oh, sure. Absolutely. Sure. Yes. Because actually
this will be a good test because, yeah, also just so you guys know, I'm actually putting together a couple of academy style videos for Fathom, because I think one of the biggest obstacles they have, because it's something different, is people understanding it and not being afraid because it's different to actually try it and see how it works for themselves. So anyway, I'll just give you my understanding. So if you start by purchasing your Fathom tokens and then you stake them, they call it stable staking. And the reason they're calling it that, because of all the reasons we already discussed about the mass. You get mass based on the value of your Fathom when you stake it. So it's value based, not token based. If you staked, let's say $1,000 worth of Fathom, you have 1,000 mass now. Those mass are what are earning you rewards every 15 minutes. And let's say the value of the token falls because people are unstaking and selling, etc. So maybe now that same amount of Fathom is only worth $400, but you're still getting those rewards based on $1,000 value. Is that right? Okay. Your hand's up, I think. So I think that's probably right. But anyway, so we talked about stable staking. Then we talked about mass and what that is. And so the ocean. So that brings us to the ocean, which is basically the reward pool. So at launch, 50% of Fathom tokens of the entire supply are going to be placed into the ocean. And that is going to produce waves. Waves are the mechanism that deliver the rewards or the Fathom tokens to your dashboard as treasure, which is the next one. So these guys have thought of some clever naming things here to keep this all water-based with Fathom and everything. So you have the ocean, which is the rewards pool. It uses the wave mechanism to deliver every 15 minutes treasure to your dashboard, into your little treasure chest. And then if you click on tides, that is their little manual ability to adjust it manually, where they could increase how much treasure is on each wave and also dial in the frequency of when the waves happen, if they want them to happen every 2 minutes or every half hour. And then the jet stream is actually the protocol that brings in the revenues. That's where 75% of all the taxes collected besides ripples go into that jet stream to purchase validators or to go into the bots and bring revenue back into the protocol. And the revenue that comes back in, click on the weather, that goes into the weather, which is the part of I guess it's a smart contract that actually purchases back and acquires Fathom to replenish the ocean. So that's kind of my quick little take on it. Oh, and the whirlpool is, I think, what is it, like 5%?
5% of the total supply.
5% of the total supply. It's going to be in its own little stake, and it's going to be used to reward, or it's going to be used to for marketing, and basically it's a way for them to pay for certain things like that. And I think, is it giveaways as well, or
anything we can need like dev tokens for, and so it's a never-ending supply of dev tokens as we need them. We've seen other projects where they ran out of dev tokens and then couldn't pay for anything.
Yeah.
So we won't ever have to, and we'll only use them as needed. And the plan is to not really unstake it, just take what the treasure that it receives.
Okay, so that's my little short spiel about it. How did I do? Okay.
Yeah, you actually did amazing. I'm very, very,
okay.
very pleased with that. I will say one little thing about the tides.
Oh yeah, okay.
It's kind of like a built-in hype mechanism.
There you go. Okay, talk about that.
Hype or sustainability, because at some points, 1% might be too much based on trading volume or revenue coming in, especially if the value of the validators drop and stuff. So we'll have the ability to pull back a little bit. But then if we really want to start a whole new marketing campaign based on hype, we can just kick up, the size of the waves going out, increase that ROI from 1% daily or something to 2, 3, 4, whatever percent. Because the one thing I did learn from the project that Bishop and I met in was when it went from a 2% reflection token, and after they announced that they were going to do a migration, they upped the reflections to 8%, and suddenly a lot of people started buying in. I was like, oh, okay, increased rewards, generates hype. And then they went to the full tax, 11% to reflections, and they went to a new all-time high. And so that's stuck in my brain that, if you need to bring hype, you simply increase the rewards and you're going to bring that hype. And so we have that ability where we'll be able to, even if we only do it for, like a month or so, or however, as we will continue to learn what the best thing or what to do with this, because we just don't know yet.
Yeah.
But we have a lot of ideas. But yeah, so we have that built into our system where we can generate hype
And I will say that's a real thing. Like, as soon as the chart turns red and doesn't look as pretty, well, now there's a real challenge with marketing. You see this all the time in new projects, and everybody's saying like, go get YouTubers to make videos, go, do something to change the chart. But everybody knows the best marketing tool is a good looking chart. So it's like, it's kind of a catch-22. It's like, go and market this bad chart. But anyway, this is their little mechanism of being able to drive traffic. I think that's pretty cool, or drive volume and drive new investor interest by increasing rewards. And remember, the rewards are not inflationary. They're not just like minting new Fathom tokens to do that. So keep that in mind.
Yeah, and again, right, if we do see that massive unstake and sell, and suddenly we're having to pay out half as much at 1% daily, if we kick it up to 2%, now we're exactly where we were before. So it wouldn't be that big of a deal for us because we were there before. And now we have a whole new marketing say, hey, guess what? Everybody's rewards calculation increased 50%. We're paying out, the same as we were, but now everybody's actually getting 2% daily. So everyone that was in before this drop happened is actually getting 3% daily based off of their original rewards, like 3 times as much as they were. So there's a lot of interesting caveats in how this all stuff turns out, just because of everything based on value and the reflections and the burning of the mass. So that it creates this whole ecosystem in itself, which is going to be a lot of fun. And we granted this because we wanted to have fun too. So
yeah. So another thing to think about is, we talked about the scenario of the value of whenever you stake it going down, but there is a scenario where, let's say you stake it at $1,000 worth of Fathom. Now that same number of Fathom tokens is worth $2,000. Well, you're only earning, your mass is only earning you rewards based off of 1,000. So what do you do then? I know the answer to this, but go ahead.
It's simple. You unstake your tokens, and then when you stake them again, it's going to be captured at that $2,000. Now you've got 2,000 mass instead of 1,000.
So so then the thing you got to be thinking about then is the ripple taxes and all that. Like, does it do all the calculations first to make sure it actually is beneficial? And if it is, then at that point you kind of reset the number of mass tokens by unstaking and staking. Yeah, so again, this is something I haven't seen before.
And that you're going to want to be outside of that first 8 days.
Of course,
so you're not taking that. Now, if we're up, 20x, and you take, a 50% hit, now that 1,000 could be worth 10,000.
Whoa, so you're saying we're going to be up 20x?
I am not.
I'm just kidding.
Anything, but and that's the thing, right? Is people have been like, especially a lot of any of the my friends or something that I've kind of brought this to. They're like, well, how much do you think it's going to go up? And I'm like, oh, okay, let me give you some financial advice. But no, we don't know. And there's some things that, we do have a higher tax. And I know that's going to kind of prohibit some. Yeah. It's going to keep people away. But when you look at this and you could buy a token and stake, and the token value increasing can increase your position, just that alone, right, or protect you if it does drop, we might see a whole different dynamic when it comes to people coming into our system, where normally they might look at a system, they might see the chart and be like, you know what, they're just going to drop, I'm going to lose my money. We might have a whole different outlook during this, so we could see some totally a different chart than what everybody else has seen. And I don't know how to plan for that or what to expect at this point. Right.
I don't think there's any way to know that. So
no, I know.
We're just going to have to wait and see how it goes. But a lot of interesting game theory has gone into them creating this with all the different structures they have in place. So AJ, shout out to you. Been asking some great questions. And I know that Bishop's been answering in the chat, but I just want to throw it out here. Could you just shed light on if there was a seed round or a different presale, what's been raised, And I think I saw another question here from, maybe it was from AJ. They want to know if they were vested or not.
Yeah, so we did have a seed round. We raised about $100,000. The price on that will be 0.001. We started raising that back in April of last year. So we've been holding that money for quite some time. The launch price the original plan was the seed round at 001 because we were going to be holding that, and then we're going to do basically we had this pre-sale open but shut it down at 0.002.
Okay.
And that was actually to raise money for marketing mostly. And then we're going to do the fair sale pre-sale like we're going to do, which is going to be uncapped. And then at a minimum of 0.025. That was the plan.
0.025 is going to be the pre-sale price?
That's going to be kind of the minimum pre-sale. Well, it's actually going to be probably a little lower than that because we didn't raise that $100,000 in that second pre-sale. We got about 12,000 out of it. But that's when Truth Seekers came in, and we decided to cancel that and switch up the way we were launching and marketing and everything. As far as the vesting, they're going to be vested just like everybody else. It's going to be the same 8-day Ripple tax. I just don't believe in holding money, or treating people differently. But most in the seed sale, I mean, for the majority of that, it's people we know personally. Are the ones that are in that, and many of them are not even in DeFi. They're like, "Hey, I'm going to send you money. Will you get me in?" I'm like, "Sure." And I created their wallet, and they don't even have access to that yet. And so it's not like they're going to, try to just dump. And again, the way our launch is working, if they do unstake and dump, it's okay because we have the protections in place to support the price, and everybody's rewards get better, and we become more sustainable. And so it's.
Yeah, basically just plan on, it's going to happen. There's going to be people that are going to unstake and sell. There are also going to be people that, well, not from the pre-sale because they're auto staked, but there's also going to be traders that just come and buy and sell. So,
and we are counting on that. Like, if we could go to some bad terms here, I hope our launch is cheated to hell because that raises money for us. I hate that word, but it's very well known. But people buying and selling, it's going to just build our system up and not add that mass to our system. So it's going to be great for us overall and everybody who staked.
Okay. How about this question here from Ben? So you can't unstake and sell your Fathom?
So there's that, the first 2 days you cannot, and then it follows that Ripple tax schedule with the 75% between days 3 and 4, 50%, 5 and 6, 25%, 7, 8. After 8 days, you can unstake, no penalty. And then, yes, you can sell 100% of your Fathom if you want.
Right. So just to give a little more clarity, you forfeit your mass, not your Fathom when you unstake.
Correct. It's just, it's just like every other. We were trying to figure out, since we're putting, mass as a focus, the dividend token, like that's basically the terminology that would be for any dividend token. When you unstake whatever dividend tokens you have, they go away from you. So it's forfeiting them. You're just kind of giving them up because it's not a tradable token. It does actually have a value because it's based on the value at the time of staking. But, they leave your wallet, and then 75% are burned, 25% are reflected. But after that 8 days, if you've got 1,000 Fathom staked, you will get those 1,000 back into your wallet.
Okay, cool. Also, what do you mean by fair style presale? Is the price constant throughout the presale?
If you're familiar with Pink Sale anything, they have what they call a fair sale presale. And so what happens is there's a soft cap but no hard cap. So the more money that is raised, the price per token does increase. But we're doing it a little bit differently, whereas basically you set a certain number of tokens for pre-sale and a certain number of tokens for liquidity, and that doesn't change. But I've basically created this way to do it where actually as the money comes in, it increases. Also, the tokens being sold for pre-sale increase. So it increases the price at a much slower rate than theirs would. And not nearly as fast as like an AMM, the calculation would, the automated market.
Got it.
So it's trying to, the more money we raise, we didn't want to have like, you know, be 100x for those in the seed sale. So by doing this, it will bring that price much less so that the people in the seed sale aren't benefiting way much more. So it's more fair to everybody else who's in the pre-sale that comes into the public pre-sale.
Okay, that makes sense. AJ again, coming strong with all the questions. Thanks, AJ. What's the best way to take profits without getting hit? Claim and sell your dividend from Fathom. Is that what's recommended? I know you can't give financial advice. Also, while you're answering this, I thought it might be kind of interesting if you pulled up, I don't know if you have it handy or if you can get it, like the part of the dashboard where you see your treasure and what that looks like.
Yeah, right here.
So maybe this might be clarifying, because you could see like when the waves go out every 15 minutes, what it's going to look like on your dashboard.
Unfortunately, some of this stuff, it's on testnet. It is not accurate. Nothing up here is accurate. But this wallet here does hold 5 million tokens currently at $416. The current staked is 42 million tokens. They're currently worth $3,300. And I've only got 1,100 mass, so we can actually do a demonstration of unstake and restake here. So yeah, this will show you what you currently have. I currently have $184 basically in the treasure chest.
This is all on testnet, yeah. Okay, yeah. This is what I wanted them to see, because they have the option to either claim it or compound it. And I guess he's asking like, what's the best way to take profits?
I'll tell you what.
Yeah, go ahead.
I don't know. So look, so there's no restrictions. You can claim this every 15-minute wave if you wanted to. You're probably going to cost more in gas than it's worth, than you're actually getting tokens. So that's going to be up to you. The ability to compound is here, which is basically a claim and stake. That's all it does. And it does it in one transaction for you.
Okay.
Keep in mind, though, anytime any staking or including compounding occurs in your wallet, it's going to reset that Ripple tax
for the whole
beginning,
for the whole balance.
And I did try to actually make that so it didn't happen, but I came up with a compromise so you can claim your tokens and there's no transfer tax. So one of my goals will be, or one of my strategies I will claim tokens, send them to a different wallet, and then stake them there so it doesn't relock my original wallet on that Ripple tax. So we made that ability there because I wanted that ability. So it's there.
Yeah. Okay. So guys, you got to make sure that if you compound, you got to know you're resetting that Ripple tax, that whole 8-day tax structure that happens.
Mm-hmm. So, and we actually have it right through here where you can buy directly through here. And so we do have this buy and stake option. And this was very important to me because of that 15% buy tax. So what this does, if I were to buy, we'll just say $100 worth of Fathom, but I use the buy and stake option, rather than taking that 15% and then staking that, and then getting basically 85 mass, because after that 15% tax, the Fathom's only worth $85. The buy and stake, it's going to purchase all with the full amount. It's going to capture the value then at $100. You get your mass based on that $100, and then it pulls out the total buy and stake tax, which is 36.25%. So that's again in the event. And what I was thinking of is, if you do buy and stake at the top, this is giving you that full value of what you're investing in that you can earn your rewards on. And that was actually incredibly important to me. Our first dev team failed, but our current guys did a great job in getting this set up in here.
That's awesome.
And so, I'm actually going to, because everything happens through transactions. So honestly, the current rewards are probably incorrect. So I got to just run a transaction, and we'll see the treasure should increase here.
You're going to do it now?
Yeah. So I just did a buy right now just to show, because I don't know the last time something was actually traded on this. Even like the rebase tokens, they only send the rebases out when a transaction occurs. And so that's the same thing, because somebody's got to pay for that gas, but luckily it's not a whole lot.
I got it.
But yeah, it's been completed. So actually, let me just leave this and we'll come back. Okay, it wasn't that long ago, so it only went up a few dollars. So now I've got everything. But yeah, and actually, I don't know if anybody out there likes looking at transactions. I could just show you really quick what's actually happening.
I'm sure
on
there's
the back
people
end.
out there.
Yeah, so this is actually this is our Ocean contract. So 893,000 tokens were just sent out to all the stakers on testnet.
Wow.
Yeah, this is. Oh, we didn't even talk about the Shill school, right? So the Shill
Well,
school.
yeah, go ahead, because someone just asked about this question. Will there be a referral bonus? So go ahead.
Yeah, a lot different than you've seen before. So we have this system called the Shill school, and it's basically it is a referral based payment system. But what happens is whenever somebody uses your wallet address, you actually receive a token called work, which works just like mass. But we've got this contract that actually I think I can. That's the tax. So the 1% of every single buy that does not use the Shilling School ID goes to this contract and gets staked.
Which is just a referral link, right? The Shill School ID is just a referral link?
Yes.
Okay, yeah.
So we're not going to have this live at first. So for the first couple of weeks, like every 1% of every single buy that occurs is going into this contract. So that's just going to continually build up at the beginning. And then the rewards that come out of that, once we're live and you can actually get those work tokens every 8 hours, we're going to be sending out the rewards that have built up in that system to everybody who holds the work tokens. So over time, this is a payment system that's just going to continually increase, just like everybody else's wallet does because of the 1% buy tax. Plus, it'll receive those mass reflections. And it can come to the time when people stop shilling and you're the only one out there shilling. You're going to potentially receive everything that's built up in that contract every 8 hours. So it's pretty neat how it's set up. That is basically designed to continually increase on its own of a shilling payment system.
Yeah, that's definitely a unique referral system. So is that a part of that contract? Is that the title? What would you call it? The Whirlpool. Is that the Whirlpool or is that its own
The
thing?
Shill School.
So Shill School is not, it's separate from Whirlpool.
Yes. Yeah.
Okay.
The Whirlpool is again just for dev tokens, for giveaways and payments in other ways. No, this is literally this exists. We're not going to do anything. I don't think we can't even access what's in it. But this is actually the contract address for it. So right now it's already gotten up to 236 mass, which there's not. I mean, there's I guess probably 10 or 11,000 mass at this total mass at this point. Oh, 16,000. Huh? People have been buying in and testing it. All right. But yeah, so it's going to just have its own stake position, and it's just there to pay shillers, and it's going to be all fully automated. It's not something we have to do on our own or manually, which is wonderful.
Okay, so let's say somebody uses my referral link, and they deposit $1,000, or they buy. Do they have to stake it, or is it just when they buy?
No,
Fathom?
It's just a purchase.
So they purchase $1,000 of Fathom. Do I get $1,000 worth of value in work token?
Yes.
Okay, and that then for 7 days, I can earn off of those work tokens before they disappear. Is that right?
Yeah. So after 7 days, they do go away, which we did so that you don't just get your link used once and then forever get paid on it.
Right.
Because that's not cool.
You got to keep people hungry,
Yeah.
Keep them out there on the streets, spread the word. No, I think that's cool. I think that also adds to sustainability.
So yeah, so the school, sorry, right here in the D app, can you, I guess you're not really seeing my whole screen, huh?
Well, we see the Shill School right there.
Okay. Yeah, Shill School. So
yeah,
I've already set this up. So once you get your link, basically copy that over.
Oh yeah, I don't see like the URL or the browser or anything, but yeah.
No, that's fine. But I'm just going to actually, it's just, the link is basically your wallet address.
Cool.
I'm actually going to create some work tokens right now.
No, I think this is pretty unique, as with all of this. So this is why I wanted to have you guys on to talk about this and just try. I think, like I said, I think you're one of the biggest things is getting people to open their mind to understand it. Yes. Once they do, it's pretty interesting.
Yeah, the whole value-based stuff is it's just different. It's not even that complicated. It just changes the way everything is calculated, really.
Yeah.
So we should see work tokens here. once our super fast test net goes through.
So I guess one thing while we're waiting for this to kind of talk about it, Shill School is the only way we'll actually have burn within our system. So normally all the tokens will be kind of flowing in and out of the ocean in a circular manner, depending on, for purchasing them back and putting it back, whatever. But Shill School, once that's staked, it's permanently staked. So all Fathom within the Shill School will be permanently burned, pretty much.
Interesting. Okay.
Yep, that's the closest thing we have to a burn.
Closest thing. It's more burned than anyone else has.
Right.
So at this point, here's those work tokens. I did 0.5 BNB. Keep in mind the price of BNB on testnet is like over $400. So yeah, 201 were minted, and you can see these ones here were done, where these were created and then they were burned automatically by the system.
Cool.
But
that is awesome. Hey,
good to know. I need to have them update that time. I guess they still had it for 7 hours instead of 7 days for testing. So make sure that's correct when we're live on.
Right.
When we're live. But
why don't you give us some info on pre-sale? Because we just crossed over an hour. We've had some great questions. I think very informative. So if people want to know more about it, they want to take part in the pre-sale, give us the lowdown on that. Where is it taking place and all that stuff?
So the pre-sale will be directly through our own D app. We looked at other locations, other like launch pads, but they can't handle what we're doing because we are taking 50% to earn revenue. We're not putting only but maybe 20% of the raised liquidity into the liquidity pool. None of them allow that because generally speaking, let's face it, if we were just like, hey, we're launching a system, this is what we're doing, most people would look at us like we're nuts and nobody would buy in, which is where Truth Seekers definitely comes in to help. But we're doing that through our own D app. Again, it will be a fair sale style. So there is no cap, no hard cap to it at all.
Okay.
But the good thing about getting in the pre-sale is there's no token tax. So you're getting 100% at that price of the tokens. And the reason we can do that is, the taxes are there to raise the funds for us, for the jet stream, plus for marketing and stuff. But we're doing that through the pre-sale. So there's no reason to hit you with a token tax before we even get started. So yeah, if the pre-sale price will be pretty much the launch price within, right around there. It's going to be very, if not exactly, it'll be maybe slightly under launch price. So it's really, if you're looking to get in for long term, especially, that's the best time to get in, because again, with the price being up and unstaking and restaking, you have the full amount of tokens. You haven't been taxed already once.
Right. That's important, guys, because remember, there's it's like 40%. Like if you were to buy the buy tax plus the stake tax,
yeah,
it's
36 and a quarter.
Okay, 36 and a quarter. That you get to get around basically if you buy when you buy in the pre-sale.
And the other important thing, that more we raise in the pre-sale, the better off we're going to be long term, because we have the ability to take 50% of that to go towards generating revenue. If you just wait till you're buying in, which is fine, you could do whatever suits you, but when we do get buying and staking occurring after launch, we got 36.25%, but only like 27% actually goes towards the revenue stream. So in the pre-sale funds raised, we get to basically twice as much that comes in as we're able to utilize for the long-term sustainability. And so that's why we really do want, I'd love to raise, millions in a pre-sale. We know that the market may not allow that, or we're a new dev team. And I know the psychology behind that as well.
Right.
We haven't launched other ones and failed several times, so we're not as trustworthy.
I get your sarcasm you're laying down.
I don't know if you heard my rant with G'day, but
yeah, no, I did. So so if people want to buy, they're actually coming here on the day of. It's not going to be on Command Swap.
No, I don't. They don't have a launch pad, I don't think.
Okay.
But it will be. I think the old one is still up. It's got to be updated. Yeah. This is actually not live anymore, but this was the first one that we decided to actually shut down. So this you cannot contribute to at this point. But this is where it will be. Presale.fathom.finance. You can't actually see that. I forgot. I can actually.
Oh, that's all right. No worries.
There it is.
Okay.
Presale.fathom.finance.
Cool.
So that's where it will be. It will just basically be just this fair sale one. We got rid of the original whitelisting that we were going to do, so no whitelisting necessary. And then the rate will basically, as I said, it will increase, or the price will increase as we raise more funds. But the idea is to get everybody in at the same price in the pre-sale, which is why we're doing the fair launch or fair sale style pre-sale.
Okay.
God, that's such a tongue twister.
Right. Okay. So there'll be more info coming out. They're in the middle of getting this new audit by truth seekers, and I think they want to make sure everything is good there and fix whatever needs to be fixed when that comes back. Then they'll announce the actual date of this pre-sale. But if you had to give an estimate, could you tell people?
The 20th.
The 20th of this month. Okay. So 20th of this month, join their Telegram group and their Discord. I have both of those things linked in the description of this video. And go there, make sure you guys are drilling in, reading the white paper, and get every question you need answered before you make any decisions.
Also, check out the light paper. This is the condensed version, which kind of goes through everything.
Yeah.
Pretty well, but yeah, it just kind of shows the flow of the circular ecosystem and how everything works and supports everything else as it goes. Because this can be a bear, we know. And
right.
And I've realized we've probably spent more time building this white paper than a lot of projects do on their entire system, on their entire project. So there's a lot of time. So everybody better read it and appreciate it. All right.
Right. Okay. Well, I have a question for you guys.
Yes.
Are you going to rug? Are you going to steal people's money?
Absolutely.
No.
Now let me okay, look. If we
sarcasm
were
is not a good
look, here's the thing. If we were doing this as a scam, we are the stupidest scammers in the world because we've raised like $100 grand and spent it all building all this. Like that's the dumbest thing in the world. So no, we have there's no desire. This is built because this is what we want to invest in. And that's how all of this is. I know I should be sarcastic.
Right. So everyone knows he's definitely being sarcastic, but
I was.
The way that I kind of approach DeFi is with what I call like levels of certainty, because there's never, at least so far, there isn't anything that's 100% certainty of like, oh, this is going to work, or they're not going to steal my funds, or some major attack or hack isn't going to happen. So you kind of are building this case, at least that's the way I approach it in my mind, of I'm trying to stack as many things, like build confluence to build my confidence in the project. So I see that these guys, number one, they've been working on it for a year. I see that they're partnering with truth seekers. They're performing 2 audits. They're performing a KYC. So you kind of just start stacking all this in your mind and building. And as you see it working, I guess that'll build more confidence. But it comes down to trust. And you guys know that you got to earn that trust as kind of quote unquote newcomers in the space in terms of being like a development team or a project team. You guys have been investors for a while. So yeah, just take all that with a grain of salt. None of this again is investment advice. I'm not saying, I'm not promoting Fathom Finance, but I thought it was a very cool, and think it's a very cool project. It's something totally unique, and that's why I wanted to have these guys on. So just invite everyone to do their own research. I think this went really well today. I feel like everybody got some good questions answered. And again, join their Telegram and Discord to get anything else that wasn't answered. But Sergey and Bishop, do you guys have anything else to add before we wrap this whole thing up?
Not so much. Thank you everyone for the great questions in the chat. It allowed us to really keep this on track and get some further information out. Matt Bills, thank you again for having the AMA. It's been great to have an AMA with someone that's put in so much work on our project up beforehand. And I'm really looking forward to your Fathom Academy.
Yeah.
Be coming out.
Yeah. I think it's going to be great. I was going to say, hopefully it'll be great, but no, it's going to be great. No, that
you're doing it.
and honestly,
really amazing.
Thanks. Well, honestly, I do this with any project I bring on, and I try to remain neutral. But like when I get excited when I like put so much study into something, but probably I need to be more like neutral and like really grill you guys more. But anyway, I'll work on that for the future.
I did ask you when we first talked to find a failure point
That's
in our
true.
system. At
That's
this
true.
point, have you?
Well, okay. I mean, the only thing, and it's not a failure point. The only thing that came up to me was that the buy pressure that's put on when the Fathom is converted into BNB to use in the jet stream.
Mm-hmm.
So we talked about that, but maybe you can mention that, because I was like, okay, well, that's going to be a little bit of a steady source of sell pressure that's going to be put on. But again, in my mind, I was thinking, well, there's also going to be a steady buy pressure coming in from the weather. It's taking the revenue streams coming in and buying Fathom. So maybe those two just balance each other out. But what would you say to that, I guess, Sir Jay?
If we could do it a different way, if we could pull the funds out first rather than buying the tokens and having to sell them, I would. But yeah, it will. And I would like, what I meant by failure point is something that would cause us to absolutely fail.
Right.
That could stunt the price. But again, and this is something I brought this up, I guess yesterday. When did we? Yeah, I guess it was yesterday. You know, when you think about successful protocols or successful tokens, what do you think about, right? Well, what would you consider a project being successful? I'm actually asking you, what would you, if you said this project is successful, what would be your thought as to why?
It operates as it was set out to operate. People are able to earn money. It gives people the opportunity to earn money. There isn't a major, I don't know. There isn't a major flaw in the contract that allows someone to drain it or something like that. Go ahead.
But like in the degen world, you know, you hear about these like, oh, well, yeah, they went up to 50 million market cap, or they hit, you know, $1 billion market cap. And it seems to be that's judged as success by a lot of people. So it's more based on the price.
That's true.
My question is, how many people lost money though in that? What if success of a project was based on the percentage of people that actually earned money and didn't lose? And that's what we're going for. So yes, our chart might not look that great because we are collecting a lot of tokens and have to sell them on it. But the reason we're doing that is so that people will not lose money in the end. So we're doing that to become much more successful than we could be otherwise. And that's maybe another way to look at success. But if we could have 100% of our investors are profitable off of this, that is my goal.
Right.
Whereas all those other ones that are now considered pump and dump, you're probably looking at 10 to 15% who actually profited off it. And they profited huge. And everybody else who bought in after that peak, they probably lost because it just kept going down. And that's what we're trying to avoid.
Nice. While you were talking, I just came up with a slogan for you guys.
Ooh, I like it.
We don't rebase, we reward. I just think you need to drill it in people's minds. We are not a rebasing protocol.
Yeah. And well, it's the thing about rebasing is it's changing the total supply. And I think that has been missed. It looks at it as well. It's a rebase as a rewards token. I know because one of our partners just kept calling us rebase. And I was like, no, we are not a rebase. But I don't know, like when Titano and Safu came out, they kind of redefined rebase. Did you see the first rebases that came out? This would have been September, October last year.
No.
They were reducing their supply everywhere, including the liquidity pool. And what it did was it increased the price. So your wallet, everybody's wallets, the supply reduced, and then also just the tokens in the liquidity pool reduced as well. So it artificially increased the price. So it literally had a green chart. The only way to know if you were in profit or not was the market cap when you bought in and then what the current market cap was. Because that price could skyrocket, but the market cap was dropping and you were losing money. So that was the first rebase. And when I started hearing this whole rebase thing with like Safu coming out and all the other ones, I was like, no, stay away from rebase. And then I was like, oh, they're doing it the other direction. they're actually increasing their supply. And I think they had to do something different to prevent those tokens from rebasing in the liquidity pool, where they like went there, but then they were immediately burned. So that didn't, because otherwise it would have had the opposite. It would have dropped the price constantly.
Right.
But, yeah.
There we go. Nat likes it. We don't rebase your reward. Okay, guys.
If Nat likes it, that's all we need.
That's all we need. That's it. So, okay. Well, thank you guys so much for coming on, for taking a shot at explaining this and breaking it down. I'm sure we're going to see a lot more from these guys moving forward. Again, get ready for the pre-sale. I keep calling it a pre-sale, fair sale, whatever it is. But yeah, we're all looking forward to it. Thanks so much for coming on, you guys. And everyone, have a great rest of your day. Go out, breathe some fresh air, and be with friends and family. All right. Thanks, guys. Talk to you soon.
Thank you. Have a great day.
Thanks, guys.